on the program, and Julia, a very good evening to you. As Michael mentioned, there was a bit of short covering happening. In your view, was the rally just a short covering indeed as it was, or is it part of a longer term rally?
Well, this is going to be the key question. No doubt that the problems in Europe haven't gone away, but the initial steps do look like they have been taken, and the EU summit agreeing on money to go directly to the banks and one supervisor for the Eurozone banks. Of course, we are still waiting on more details, and one of the key details that the market's looking for is a top-up of the European Financial Stability Facility, and really no new funds were committed at that EU summit, and that's one of the things that the market has been looking for. Short covering rally for the US market on Friday saw quite a violent upside reaction, up by more than 2%, and on the Australian share market we saw a good day as well, although by the end of the session only up by 1%. This week's going to be a little bit of a strange one, given that we do see the US on holidays in the middle of the week for the 4th of July holiday, but this week's an important one for manufacturing numbers all over the globe, and China really kicked it off with its PMI numbers. We saw the official PMI numbers over the weekend coming in at 50.2. We also saw the HSBC PMI numbers coming in at 48.2, so slightly above the flash PMI numbers, which were at 48.1. We will be watching other PMI numbers very closely, especially those coming out of the Eurozone and the US. We've seen South Korea around the region coming out as well, and they've been quite disappointing. And then, of course, the central bank meetings that we'll be watching closely. Here in Australia, we'll see the Reserve Bank meeting tomorrow. Expected rates are expected to remain on hold, but the big one that the market's going to be watching is the European Central Bank, and their rates are expected to be cut by 25 basis points.
For earnings to be around that $39 million mark for the first 6 months, on face value, it's no surprise today's announcement has disappointed.
It has been a profit downgrade from market expectations. Consensus was at about $39 million. Aristocrat Leisure coming out to say that first half profit will be between $30 to $33 million. And there had been an expectation that Aristocrat's earnings would be quite good in 2012. In fact, if we have a look at the consensus forecast, it's at $97 million, which means to meet consensus, Aristocrat Leisure would have to make about $60 million in the second half of the year. Of course, it has been a difficult 4 or 5 years, and hopes have been that earnings have bottomed. I guess the good news is that earnings should be skewed to the second half, but based on the forecasts coming out today, it does look like that there has to be revisions to the second half of the year, as well as those full-year consensus earnings. So unfortunately, a very bad day for Aristocrat Leisure. We actually saw the shares losing more than 11% today.
Fresh guidance to the market. The numbers do stack up with market consensus of around 442 million. So the extent of the upward surprise is generally large, it would appear.
This announcement was positive for 2 reasons, and the first is that generally that Lendlease doesn't provide guidance, so the fact that it is providing guidance seen as a very positive move by the market. And secondly, the guidance was higher than consensus. As you mentioned, consensus was around about $440 million. They've come out to say that they do expect profit to be about $485 to $505 million. It looks like Valamis has been doing quite well in terms of project wins, and the result coming despite a very weak Australian residential market. So Lendlease having a very good session, up by 4.3% at the end.